I sold Palantir right when one of the first analysts turned bullish, the very moment the Wall Street was about to follow. Growth stocks usually move in cycles. First, the business starts growing. Second, first analyst flips bullish, then the rest of the market joins, Wall Street joins, price targets rise, and then the stock goes higher. Around August or September of 2024, Dan Ives at Wedbush, he was the first few analysts to lay out a bull case for Palantir, and he had a target around $50. One of the first major bullish lines before the broader market analysts upgraded. That's when I sold. I should not have sold all of my Palantir holdings at that point of time. Here, emotion got the better of me, not financial sense. The stock hadn't broken. My patience did. If I had held a portion, I would have captured the bigger move as more analysts turned bullish. Second lesson, PayPal. It was a turnaround story, is what I felt. But my mistake was I didn't align with the future growth, even though the PE ratio was very less, around 15. Its
Revenue.
growth was steadily decreasing. Even if we do 5% EPS growth per year and a PE of 14, PayPal's upside is limited in the next couple of years, say to around $70, $70 to $80 in 2027. So slower growth would lead to a lower PE. That doesn't necessarily mean it's a good buying opportunity. Let me compare PayPal's example with AMD. AMD recently released earnings. They're projected to grow
Revenue.
more than 35% CAGR, and their EPS, you can see, grew more than 100% last year. Their net income grew more than 50% last year. So even if we assume the net income growth of 50% and a P ratio of 55 around in 3 years' time, say 2028, its P ratio is around 80 or around 90 right now. So P ratio of 55 for a 30+%
Revenue.
growing companies, highly likely. So based on these projections, its net income would be around $13 billion. And as for the last 3 years, AMD has always beaten the EPS projection, Wall Street EPS projection, and net earnings growth. So in my view, they'll still beat these 35% projection numbers. And based on this, the stock will be more than $450. That's a more than double from the current price. I right now hold that stock, and I feel that is still a better opportunity than PayPal you can, as per these projections and earnings.
You can see Rakesh Jhunjhunwala, who's basically Warren Buffett of India, saying when to sell the stock. He says two things. One, if there's a better opportunity, or when the future growth of that stock is already priced in. That is, the P ratio is too high, or the EPS has reached its peak.
I sell a stock before a better opportunity when I need capital. Two, price is equal to P, EPS multiplied by P. If the EPS is peaking, or the market recognizes the future EPS which is going to peak, and the P is unsustainable, that is the time.
And please like, share, and subscribe. Please comment on any of your learnings that could help others to grow in terms of financial freedom and help achieve financial independence. Thank you so much for watching.